Hello everybody, in this video on fund accounting services, we're going to take a specific look at the hurdle rate. The hurdle rate is used to determine the performance fees that have to be paid to the general partner in case of outperformance. And therefore, how do hedge funds identify the hurdle rate? If you're interested in a career in global capital markets, in fund accounting, corporate actions, trade life cycle, and OTC derivatives, then do subscribe to my YouTube channel where I provide content-rich, well-researched topics in these areas. If you hit the notifications button, you will know the shorts, the YouTube videos, and of course the quizzes that I post regularly on the community page. Hedge fund fees are of two types. I've already uploaded a couple of videos on hedge fund fees. These are the management fees that are and the incentive fees. The management fees are mandatory in nature, and the incentive fees are dependent upon the performance of the fund manager. The hedge fund fee structure could be 2:20, but in the year 2021 and 2022, I have seen hedge fund fee structure as 1:15 as well. Okay, so how do we interpret the hedge fund fee structure? The first one is the management fees and the incentive fees are broken down in this format. The management fees is 2% of the assets under management and therefore they are paid annually. Incentive fees is 20% of the performance and the payment mechanism depends upon what is mentioned in the limited partnership agreement, also called as the LPA. The incentive fees are driven by two parameters that have to be breached in order to be paid. The first parameter is the hurdle rate, and the second parameter is HWM or the high water mark. We will be doing another video on high water mark. First, let us try and understand what is the hurdle rate. If you've watched Olympics and national games and athletics, etc., you know the hurdle is something that has to be crossed. It cannot be broken. In a hedge fund also, it means exactly the same thing. So let's go back to my favorite hedge fund, Hari Hedge Fund, which has theoretically shown these kind of outperformances. In the first row, I have mapped out the years, year 0, year 1, year 2, year 3 and year 4. I have taken multiple scenarios so as to show you how and when hurdles become applicable. Okay, how do the hedge fund managers, the general partners calculate that? Okay, now see, this is something that the limited partners don't want to give and the hedge fund manager obviously wants it, right? I mean, his performance is determined by that, his bonuses are dependent on that. Therefore, hurdle rates are extremely complex to understand and implement and have a lot of clauses for identification. I have taken very simplistic situations like this. In the first year, year 0, the fund starts off with $100. The year 1, it increases to 125. The second year, the NAV increases to 150. The year 3, Y3, the NAV falls to 130. And in year 4, the NAV has again increased to 140. Let's now calculate and understand how and whether the fund has grown, whether the NAV has grown. Okay, so in year 1, it is very clear, year 1 over year 0, the fund has grown by 25%. How did I get 25%? 125 minus 100 divided by 100. Similarly, we calculate for year 2 where the growth is 20%, that is 150 minus 125 divided by 125. In year 3, the NAV has come down. This means that the growth is in negative territory and this growth is now at minus 13%. And finally, in year 4, the growth has again increased, the NAV has again increased to 140. But now we have to calculate Y4 over Y3 and therefore the growth now is 7%. Okay? Similarly, Hari Hedge Fund and the limited partners in their agreement have decided that the hurdle rate is going to be 10%. So now we have to calculate the hurdle in dollar terms, which is exactly what we're going to do. In the 0th year, there is no hurdle yet because the fund has just started off. In year 1, the hurdle is 100 plus 10% of 100, that is 110. In the second year, the hurdle is now 125 plus 10% of 125, that is 137.5. In year 3, the hurdle is now 150 plus 10% of 150. And in year 4, the hurdle is 130 plus 10% of 130, that is 143. So the next stage after calculation of hurdle is to find out whether in which years the hurdle rate is applicable for determination of incentive fees. Okay, so which year are the incentive fees applicable? In year 1, the hurdle is 110, the NAV is 125, it is applicable because the performance is greater than hurdle. In the second year, the performance is again greater than hurdle, it is now still applicable. In the third year, is the hurdle applicable? No, it is not applicable because the hurdle is more than growth and therefore the incentive fees is not applicable. In the fourth year, is the incentive fees applicable? The NAV is 140, the hurdle is 143. Even though the NAV has grown, it has not breached the hurdle and therefore incentive fees are not applicable in this year as well. Let's now try and understand the concept of a soft hurdle and a hard hurdle. Okay, a soft hurdle is when the incentive fees is paid on the entire performance. If performance is greater than the hurdle rate, then incentive fees is paid. On what is it paid? It is paid on the entire performance. Okay, so therefore the fund manager can then collect a lot of dollars as performance fees for his performance. Let's understand this. Going with the same parameters. In the first year, the NAV has grown. In the second year, the NAV has grown. The third year, the NAV has come down. In the fourth year, the NAV has again shown a green tick. The hurdle has been calculated as before. In the first year, it is 110. In the second year, it is 137.5. In the third year, it is 165. In the fourth year, it is 143. So incentive fees are paid in the first year, in the second year, they're not applicable in the third year and the fourth year. Now, what is the base for calculation of the incentive fees? To identify the base, in the first year, even though the hurdle is 110, the performance fee is paid on the entire outperformance, that is 125 minus 100. In the second year, the incentive fees are paid on the entire outperformance, that is 150 minus 125, that is 25 again. In the third year and in the fourth year, these are not applicable. Okay, so we have to in this soft hurdle case, we are using the hurdle only to identify whether incentive fees are payable or not. If they are payable, then in a soft hurdle scenario, we have to pay on the entire outperformance. What happens in a hard hurdle? If there is a hard hurdle rate, then the performance has to exceed the hurdle rate, which is obviously in all the cases of performance fees. But the performance fees beyond the hurdle, the performance beyond the hurdle becomes the base for calculation of the incentive fees. Okay, not just the performance, but the performance beyond the hurdle. Let's try and understand that with the same example. I'm just going to run through all the numbers wherein the NAV has increased, NAV has decreased. Hari Hedge Fund has a hurdle rate of 10%. The hurdle has been identified. We know that the incentive fees are to be paid in year 1, year 2, and in year 3 and year 4 they are not to be paid. The base for calculation of performance fees now is in year 1, $15. How did I get $15? The NAV has 125, the hurdle is 110, 125 minus 110 is 15. The base for calculation of the 20% performance fees is now 15. In the second year, the base for calculation of the incentive fees is 150 minus 137.5, that is 12.5. In the third year and in the fourth year, it is not applicable. Therefore, hard hurdle rates are that much more difficult to breach and hence they are more stricter to implement, and fund managers are very particular about how they make the payment, okay, and how they receive the payment for the incentive fees when there is a hard hurdle rate. Now, if you look at the overall economic scenario, The markets have been a little volatile. It's in fact moving towards negative territory. Fund outperformance is challenging, and therefore, limited partners also want to pay out very less by way of incentive fees. Thank you everyone for watching this video. Keep learning and keep growing with Sushila Hariharan.